travel, and we trade. Calling you live and direct from Japan. We're moving around the world. Again, that's part of what we do here at Cosmic Training Academy. We are digital nomads. We do travel around the world. We work from online. We do different online activities, different online jobs. Also, we incorporate trading with that. That's part of what we do. And today we want to unlock the secrets of stock option trading. Okay, so today what I want to basically do is talk to you about how we're going to delve into the fascinating world of stock options. Okay, and then basically what we're going to do is we're going to explore the strategies and the techniques that's going to help you to unlock the potential of the dynamic market. You know what I mean? So it doesn't matter whether you're a beginner or whether you're an experienced investor. Understanding stock options, can be a key to help you maximize your investment potentials and your returns. Okay, so what I've been doing this for about 6 years, so I've learned how to do it where I control a lot of risk. But what I want you to keep in mind is that the more you control your risk and the more you tamper down your risk, the less probability of you having these big income. Okay, so what you might find is that a lot of people who said they got into stock options all of a sudden made like from $500 they made $10,000. It's very possible. The issue is how much risk did they take? How much drawdown did they take? And that's the thing about how I trade now is I don't take a lot of drawdown. I don't take a whole bunch of risk. I keep it at a minimum. And but the opposite side of that is I may not, based upon your account, that's how much you're gonna make. So obviously, the bigger the account, with a low risk account, high probability account, you don't make as much money, but you make more consistent money. Just like anything else, the more money you have, the more money you can make. Okay, so what we want you to do is we're going to embark on a journey together and discover some of the secrets of stock option trading. Okay, um, basically, what are stock options? Let's just talk about that first. Definition and types of stock options. We got calls, which is when we believe the direction is going up or bullish. We got puts where we believe the direction is going down or bearish. Difference between options and stocks, because you need to know that options are contracts, stocks are assets. Um, Basic terminology, we're going to talk about strike price, expiration date, premium, intrinsic value, time value, and all of that stuff, okay? So, factors that, options pricing. Factors that influence the options prices. There's an underlying stock price. We're going to talk about volatility. We got to deal with time to expiration because you need to know that the closer you get to your expiration time, the closer you get to closing out that particular option. So options go by the time. And you got to deal with interest rates, excuse me. Um, we're going to also talk about different models and stuff like that, okay? What you got to do is you got to understand option strategies because you're going to be buying or selling, and you're going to be doing calls or puts, okay? One of the most difficult things for people to understand is, and one of the things that kept getting me caught up in the early game is if I was selling a put, does that mean I'm looking for it to go down? Or if I'm buying a call, what does that mean? So what I kept doing was I would only buy calls. Why? Because buying calls is easy. When you buy a call, you just expect the price to go up. So I would always look for something that I thought the price would go up, buy a call, and then when it got to made me money, I get out as fast as I possibly could. But um, there's also selling calls, and that's where things got a little bit complicated. Excuse me. I cannot. You already know. Anyway, this where things got a little bit complicated. When I started selling things, I didn't quite understand. I'm like, okay, wait a minute. If I'm selling it to go up, what does that mean? Basically, you're giving somebody else the option to get it from you. Just like if you're selling a put. If it's going down, you're giving somebody else the option to take it from you if it falls to a certain number. That's it. Okay. You got to deal with covered calls. You got to deal with cover calls. So again, what is a cover call? A cover call is basically when you already buy 100 shares of something, and you have you're able to be able to sell something, a contract against it. In other words, you have AT&T, 100 shares of AT&T. You bought them at $17, and now you sell against them. So anytime you own something already, which in this case in options, you must own 100 shares of it to do one contract. Then when you turn around and you sell against it, you want to be selling against the stocks that you already own. So if I own 100 shares of AT&T at $20, then what I would do is I would try to sell a call option. The reason why is because I want somebody to get it from me for a higher price. So in other words, now I'm going to sell calls for $21 or $22 and so on and so forth. But this the catch. Even though I'm selling those calls, not only am I getting paid up front to sell those calls to the person buying them, but also if it doesn't reach that price, meaning that if AT&T should fall to $17 by the time the expiration happens, then I get to keep the money in my pocket, and on top of that, the person I keep my stock, my 100 shares, or however many shares that I have. Okay? And then that person doesn't get the stock, and they already paid me for it. And now they got to get another contract. I really apologize, guys. I haven't really been sleeping well lately. Okay? Cover calls can be a very, very powerful and lucrative thing to do. I implemented it into my wheel strategy. Okay? If you're buying a put, you're buying puts because you believe that something, underlying asset, is going to be falling down. So what you're doing is you're looking for that stock to fall, and what you're going to do is you're going to sell it back at a higher price later. Okay. It's embarrassing. I haven't yawned until I push record. I have no idea. I need to go see a doctor about this. But anyway, so that's that. You got long call strategy, and long call strategies are good because if you do a long call, which say for instance, you do SPY, you just put it for far out. You could even do a year away or 2 years away, and if you really believe that the market's going to continue to go up for a long time, and you're doing long, that means you expect it to go up. So if you do a call, that means you expect it to go up, right? And so you do that strategy, and you put it far out, which sometimes we call those leaps. And if you do a leap, then that means you expect it to go up for over a long period of time. But because it's not just the stock, you bought the option. Now you multiply that times 100. You see what I'm saying? So now you got leverage on your side. So that may and imagine and just remember that the farther that you go out in time, when you're buying a call, the more it's going to cost you. And I want you to understand that it's good the more time you have when you buy calls, because time is against you. And time in the Greeks is called, it's basically referred to as theta, theta. So the closer you get to your expiration, when you buy a call, the more money you're losing. So if you look at your theta and you see it 0.25, that means you're gonna be losing 0.25 every day, okay, on a contract. So pay attention to that, okay? When you're selling, it's the same thing. The cool thing about selling a call or a put is that you get paid whenever you sell. Just keep that in mind. The reason why that's so powerful with an option trader is that you the best thing you could ever do in options is learn to sell first. Forget about buying. Buying is the easy part. That's the part that everybody jumps to and gravitates to, and they see the money go up so fast and they get excited. Selling is where the real long-term potential and growth is at. So learn how to sell options first. Learn how to do that. Cover and do it covered. Never do it naked. Don't sell anything that you don't already have. You know, I don't know if your mom ever taught you that. That if you don't own it, it ain't yours. Sell only what you have. What you don't want to do is sell something that you don't own and then have to go buy it for a high ass price and then sell it to somebody for a low ass price. You get that? Let me say that again. Don't sell something you don't own. Go buy it first. But how do you buy it? You buy it at the lowest price possible. How do you do that? You buy an option for a low price. Actually, what you can do is you can sell a put. So what you do is you sell a put. Let's just take AT&T. We sell a put. Is right now today AT&T is at $20. I'm gonna sell a put to John for AT&T at $15 for tomorrow. Because if it gets 15, I want AT&T. Why? Because it's below the amount that it is today, and I believe that's a good low price. And I believe tomorrow, the day after tomorrow, I can sell it for a higher price. So I tell you what, I'll sell you a put. And the thing about it is, why would John pay me to do that? Because if his shares of AT&T that he bought at $20 go down to 15, he needs somebody to take it off his hand because he don't want to lose no more money. Maybe he bought it at $14 and it done dropped down to 15. He want to make sure he get his money out of it. Hey, I'm your man. I'll take it from you for 15 because I believe I'm gonna get some money on my transactions. So let's just say tomorrow it dropped down to 15. Now it got put to me. Okay? Guess what? I gotta have enough money to pay for all 17 of those shares, which is $1,700, right? Okay. Give them $1,700. I get my AT&T shares. I got it for 17, or did I say 15? Whichever one, 1,500. So now I turn around and what do? I sell a call on it. For how much? For more than what I got it for. How much did I get it for? I got it for 15. How much am I gonna sell the call for? It's 15 or higher than $15. For how what time? Sometime in the future. When? Doesn't matter. Whether you me, I prefer to go to the next earliest date because the sooner I can get paid off of that deal and close the deal and go to the next deal. So for me, I like to look at weekly options. So that's that. And that's another thing. Look at weekly options first. Look at monthly options and so on and so forth. If you want to get paid every week, then you'll have a list of weekly options that you deal with. If you want to get paid by the month, you have a monthly options that you deal with. Okay. Again, the thing about options is never touch options that you don't ever want to own. Let me say that again. Never touch options that you don't want to own. Do you understand what I'm saying? Don't do it for the money. Don't do it for the fun. Don't do it for being cute. Do touch an option that you want to own. If you like AT&T, you believe it's gonna grow, then you trade AT&T. If you believe Microsoft is gonna be one of the most powerful companies, keep on trading Microsoft. If you think Facebook is gonna have it, do it. If you think Google, you think Tesla, so on and so forth, touch stocks and underlying assets that you believe are good. Okay. Um, Bullish strategies. We have a lot of bullet strategies like call spreads, bull call spreads, and bull put spreads. So, the thing about it is, there are a lot of different spreads. I don't think this is going to be the right time to be talking about spreads because the thing about spreads is that they minimize how much money you got to put. I'll just do it. Say it this briefly. Is that with spreads, and that includes put spreads, call spreads, bull call spreads, bull put spreads. That includes straddle strangles and iron condors, which I love iron condors. But the thing about it with spreads is this: you can do an option trade with less money. but the probability on the spread, because it's helping you not spend as much money, it's also not going to allow you to make as much money. You're going to understand this reoccurring issue that happens to in an option game, that the less money you spend, the less money you can take out. The more money you have at risk, the more money you can extrapolate from the system. So don't ever think that just because you got in something cheap, that means you know you're beating the system. No, that means that on the other side, somebody's going to be extrapolating the majority of that money for letting you get in cheap. Somebody else going to be taking that, whether it's the house or it's another trader. Okay, so with Strangle straddles or any of the other iron condors or any of these other kind of spreads, they're great to get into, but be careful. Maybe I do want a video on spreads and stuff like that. Again, I've got some, but you know, you go back and look at some of my spread videos, and just be careful with those, because you know you got to know what you're doing and you got to take your time. And I suggest you go in slow and go in low. That's the best way. Okay. All right. Now, you basically there's a thing called fundamental analysis, and that's when you're assessing the financial health of an underlying company. So you want to check at their their previous history of how they've been trading. You want to check and see check their technical indicators. It's going to help you to make informed decisions as to whether you want to deal with that company or not. Okay, but we got technical analysis, which that's basically what you're gonna be looking for: patterns, trends, and things like that. So if you see it, taking higher highs, lower lows, so on and so forth, this is how. And most people pay attention to the technicals when they're doing day trading. Me, I only do lightly day trading. Probably about less than 10% of my trades are day trades, because I believe in capital growth and not rushing to try to make a bunch of money. And because I do wheel strategy and I do a lot of weekly expirations, it expires every week, so I make the money weekly. So so the bigger your account, the more money you get on your weekly check. Okay. If you really want me to say, I'd say that if you had $30,000 account, that you probably could pull off a $500 weekly um, check or more without taking with a 85%. Just throwing numbers out there, 85% probability of success. So I'd say if you had about $30,000 account, you could definitely guarantee you're gonna probably bring in 500 to $1,000 every week with 85, 90% plus probability. Just that simple. Now, if you got other money coming in, you just roll that into your account, make your account get higher, higher, higher. Then what happens is it just keeps getting bigger, and then your take home weekly, you start taking bigger stocks, or you start taking more options contracts. So whether you might have had one option contract, now you get two or three or four, and which means that when it come back, it multiplies. And you just guys got to understand and remember, the compound interest and compounding is very real. Albert Einstein said that was one of the wonders of the world. Remember that. Okay, you gotta pay attention to technical analysis, because technical analysis helps you to be able to make those kind of decisions that will let you know whether you need to get in, get out. Is it too late? Is it too early? Support, resistance, so on and so forth. We talked about option Greeks. You got delta, you got gamma, theta, vega, rho. Understanding how option prices react to the different changes. Okay, that's what Greeks kind of help you do. It's kind of like basically letting you know how option, or how it's going to react based upon this particular time, or so on and so forth. So understanding the Greeks is good, but it also depends on which Greek you need to understand for your certain particular trade. Because me, basically, I look at time decay and I look at delta for the most part. So, which is theta and delta are the main things I look at. Delta, I want to make sure that how much money, how much probability I have, and theta, I want to know how much time I got. Okay, so those are my two favorite Greeks, and as long as you understand those, in my opinion, you should be good. You got to now go talk about risk management and position sizing. You got to set your risk parameters, guys. And under no circumstances do you. It's like when you go in the casino and you say, "I'm only gonna spend $100." Only spend 100. You know how you make sure you only spend 100? You only take 100 in there with you, right? Do not take more than you ready to spend, okay? Do not, or ready to lose, I should say, right? Okay, so you develop a risk management plan, protect yourself at all times, and be ready to walk every time, and be emotionless with it. And the best way I can tell you as a trader who's been trading for 6 years is do not think that you're going to you're going to close that trade. The best way as a beginning trader, if you want to make sure that you control your risk, put in a sell. As soon as you do the buy, put in a sell. Don't put in an automatic sell. Put in a limit order to sell it. Put in a sell order. Make sure that if you bought it at 5, and if it gets to if you bought it at if you bought it at 10, you can put a sell or limit order sell. You're gonna sell it at 20, or you're gonna sell it at 5. So if it drops down to 5, you're out. If it goes up to 20, you're out. No matter what. But if you do it where you watching it yourself, your emotion will take over, and when it gets down to 6, you won't be ready to push the button. And it's gonna drop to 3, then 2. Then it's gonna be too late for you to even get out, and you're gonna say fuck it. It's gonna go to 0. You're gonna lose everything. And that's how people blow accounts. Control your risk tolerance, and make sure that you look at your position sizing. Don't over listen. Don't get sizes that's so big because you see all the money that is in it. Remember, man, we in this for a long time, not a good time. This is business. This is not we. You might enjoy it, but this is business. You want to be here for a long time? Control your position size. Just because you can buy 30 uh, um, just because you can get 30 orders of this option doesn't mean that you should do it. And just remember, stay with the rule of 3%. If your account is $100, then at no point in time should you be spending more than $3 on a particular trade. And you first thing you be like, man, that don't even make sense. That don't make sense. It does make sense. That's the reason why I've never blown up an account. Never. That's why I'm still in the game, because I follow those rules. You know, when it comes down to options, I've never blown an account. When it comes down to forex, that's another story. But anyway, okay, so um, you know, and just remember, we're going to allocate just a certain amount of our total account to each particular trade. And I like to say is at the maximum. And I only do this because I like the clean numbers. We like numbers and clean numbers. Remember that as human mind, we look at fives and tens and 20s and 30s, and we look at numbers like that. So I sometimes will do something at a 10 or 20 mark because it's just easy to remember. It's easy, it's clean. So, but I would say keep it at a 5 or 10% at max, never over 10 of your account size on any particular trade. Never. You really shouldn't even be doing over 3%, to be honest with you. But I understand that sometimes when you have a low account, a smaller account, when you only do 3% on a trade, it makes it seem like, what are you doing it for? And really, the question at that point you should be asking yourself is, do you need to go get you some more money and put in that account? And usually the answer is yes. Yes, you do. That's the answer. Yes, you do. You know, 'cause my opinion is that is if you less than 5,000 on your trade account, unless you know. I mean, I've been there many times, and just to be doing it and just to be practicing and building it up. And honestly, it may take you years. You can start off at $500, and if you never touch it, and every time you get paid from a regular job, you put 50 or 20, 100, and this whatever, and you can build the account up over time. I did it. I did it over 4 or 5 years working a job, and we lost a lot of it out at the same time when I was trying to put money in. Next week I put some more money in, I lose some money and put some more in and lose some money and put some more. And I did that for years, years, man. Just remember, option chains. So just explore popular trading platforms, check out different features, um, navigate around to the option chains and understand how the orders and the types, sales, buys, ask, bids, and so on and so forth. And it's good to understand an option change. You need to know the times, the dates, and you need to be able to get familiar. And like I say, stay familiar with one particular, two particular, three particular underlying assets. Don't be trying to have like fucking 50 million different ones. Get familiar. You know what your price range is. If you got a $10,000 account, then you shouldn't even be looking at any stocks that's more than a certain amount. You know we ain't supposed to go over 3%. So if you got a $1,000 account, and you can't really afford to be looking at anything more than $3. That's 30%. You see what I'm saying? So you definitely can't even be looking at for anything over $3. It's $3 gonna be 300 on one contract. If you got 1,000, that's 30%. You're already way over your amount. You really can only look at stuff that's a dollar. You see why it's crazy if you have a small account? So anyway, that's that. Options calculators and analytical tools are important. You got to utilize your online calculators because they have a lot of different websites that allow you to do a mock of your of whatever kind of option that you're doing, like option strat. You can look at that one, and what they do is they let you mock it up, and you get to see how much chance you have, a probability of making profit and or making loss. So use those analytical tools. Never go in blind. And remember, one tool is so close to having none. So just have at least two of them. So if it's on the Robinhood thing, look on an option strat as well before you, and don't be in a rush to make the trade. Let me tell you something, man. That's one of the biggest mistakes that most traders make. They be in such a fucking rush. They think that this trade will never come again. Trust me, one like is somewhere at this very moment. You just have to look for it. So don't be in a rush. Take your time. If it's meant for you to be, you're gonna get it. Stay awake, stay aware, and put in alerts. If you really want to catch something on time, put in some alerts. If you know you want something at a certain price, put alert on it. You know what I mean? That's a lot of people don't do that shit. They just want to catch it at the right time. No, put an alert on it, and you guaranteed to catch it because it's gonna let you know. It's gonna send it to you, tell you, Ford just dropped down to $3. You might want to come take a look at this. Boom. Now, okay. Um, a lot of that's just some of the mistakes and pitfalls is that they don't educate themselves. A lot of traders, young traders, new traders, they don't educate themselves. They think that they just come in the game, watch a few videos, and all of a sudden they go do it. No, man. This thing is about consistently educating yourself over and over and over again. Don't concern yourself with the noise and the news and the CNN and who Dr. Fauci and all these other different people, what they're doing in the feds. And at the end of the day, um, I understand when you're day trading, you're worried about that, but at the end of the day, just pay attention to what's going on, the fundamentals that's going on with the underlying asset. If it moves, then you make the move. If it don't move, you don't make the move. Whatever the case may be, but it doesn't matter. All of that stuff is just noise. At the end of the day, you're supposed to be familiar with the underlying asset. So if it's moving, then you move it. And as a matter of fact, you don't make any trades blindly anyway. So in other words, you shouldn't be putting orders in that you are worried about volatility of. You see what I'm saying? In other words, if you think that something's crazy happening tomorrow and you put in a trade tonight before the market opens, why don't you wait till tomorrow? Let the market open. take a look and see what's going on. Then place the trade, okay? And be careful about anytime they're coming out with their quarterly earnings reports and all of this stuff. You need to pay attention to that. You should know what that is, you know. Dividend payouts. I typically love to trade things that have dividends. If you look at any of my other videos, you see that most of the stuff that I like to mess with, dividends. You know, you feel me? Um, so it's important to continuously keep on learning and teaching yourself and paying attention to market trends, different softwares that's coming up. Um, don't listen to rumors. Don't listen to hearsay. Don't let the news uh, overwhelm you. Don't overtrade. When you overtrade, is basically is you get excited. I did this and I would trade all night long. You know, in and out and in. Forex, man. When the options close, I go to the forex market. The forex market close, I'm going to, you know, I just keep on going. You know, anything that could trade at any given time. Just you just don't have to do it. You know, pay attention. Have two or three favorites. Only trade those and only trade them when they're exactly where they're supposed to be at. Okay, that way, and be stay disciplined and just avoid the emotional decision making for all your trades. Okay, um, don't neglect your risk management. Like I said, the significance of implementing the risk management strategies is important. You need to understand and mitigate all your losses as much as possible. Just control everything. Okay? So I want to hope that helps you guys be great traders. We at our time. We're 30 minutes in. I mean, my time flies when you're having fun. Mr. Cosmo. This is the Cosmo Training Academy live from Japan. We always out here moving around. Um, you now can unlock some of the secrets to the stock options trading with the Cosmo Training Academy, and now you can master some of these basics, and you can understand some of the option strategies. You can analyze options. You can manage your risk. You can use the right kind of tools to help you with everything, and now you're on your way to becoming a successful option trader. Remember, practice, and practice. I appreciate you guys. I see you on the next one. Peace.